Good morning and welcome to today's edition of your Bond and FX Markets Update. Let's start with the recent Jackson Hole Economic Symposium, where investors appear to have derived some amount of confidence that monetary policy accommodation is here to stay, at least in Europe and Japan, with central banks in both those countries indicating that they are willing to be accommodative for a little bit longer to ensure growth is sustained in these economies. That may help boost the appeal of the Indian rupee, with investors really looking for that extra yield that Indian assets provide. Now, the rupee's had an indifferent couple of weeks, but we'll see how it goes this week. The most important hurdle, of course, for it this week is going to be the update of economic growth, which we get this Thursday. Now, it's important to remember that the last edition of this data that we had showed economic growth at just 6.1% in the January through March period. This was almost a full percentage point below what economists had predicted. So that means people are going to look at the next number even more closely. Growth is expected to have rebounded to 6.9% in the April through June period. Any disappointment on this front is going to open the door for the Reserve Bank of India to cut rates once again. And that, of course, undercuts demand for the Indian rupee. So we'll see how we go as this week progresses. Thank you so much for joining us today. Till next time.